Welcome. I thought it might be an idea to take a look at sterling as we head into the week of the general election. Recently, sterling failed to hold on to the gains up at 130. It's since broken through 129 against the US dollar. And it comes at a time when the IG Digital 100 is still calling for a majority of around 30 seats for the Conservatives. But it also comes at a time when the YouGov poll has just come out with details showing that the Conservatives may not even manage a majority. So ahead of Thursday, let's take a look in some more detail about what's been happening with sterling with Josh with more on this, because as sterling loses ground, we've got to go back, I know, to mid-April when we saw Theresa May stand up outside number 10 saying she's going to call an election. Sterling spiked and it looks like potentially, possibly, I suppose, we could well see all that evaporate if it does not go the Conservatives' way on Thursday.
Yeah, I mean, this is a very interesting circumstance at the moment because, number one, we've seen the markets reacting in a certain way in general to these gains that we've seen from Labour, i.e. generally we've been seeing weakness in terms of the pound off the back of that. That being said, if we did see Labour come into power, could we see the same kind of thing that we've seen in terms of, let's say, Trump, where we saw the US indices actually performing very well in the aftermath because they said actually his policies are good for it. Now, certainly people are saying that you're going to get a softer Brexit with Jeremy Corbyn, and as such, you could actually see losses in association with his gains in a lead up to it, and then actually if he was to come into power, maybe you could see some gains. But you know, if I was to look at it from the wider spectrum, I do think that there's a lot of room for us to start turning lower on this case, because we've got the potential for him to come into, okay, let's say the Tories don't get the majority. That's not necessarily going to be perceived as a positive. Even if we did see them get a majority, we could still see people cling on to the idea that there's less seats than there were previously perceived. Of course, it depends on how they come in. And then if you're looking at the pound as a whole, I do think that it's starting to look a little bit more bearish anyway. And bear in mind, even if we did get a strong majority, we're still in a position where the UK economy has a lot of big question marks over it with regards to the Brexit negotiations. So there's a number of different reasons why I think we could start to see the pound turning low. And certainly this daily time frame shows you that we have actually been doing pretty well of late, but I do perceive it as a retracement of the sell-off that we saw in the lead up to it. So what we can see here is that we've been seeing this nice wide move higher, and we can see that whilst we have been regaining ground, that the precursor to that was the fall below these key swing lows. So certainly we were gaining ground, higher highs, higher lows, and then once we broke below that, that was a signal to me that despite the fact that we're going to get some sort of retracement, which is what I believe we're in at the moment, I think that's a precursor to us actually moving lower. So if we look into the 4-hour time frame, what we can see here is that we've actually been faring very well. This is very surprising considering what we've been seeing in terms of the services PMI number so far this morning. But we've come into this 129.15, which is a key resistance level. You can see it's been held onto on a number of occasions recently. So a break through that level and the 100 period SMA on the 4-hour would point towards a deeper retracement into this kind of area. I think on the hourly time frame I should have, there we go. So we've got this Fibonacci 76.4 around about 129.58, and then below that we've got a 70% retracement, 129.48. Now 70% is not a Fibonacci, but I utilize it as a risk to reward tool, so we can see essentially a short from that position would be a 2-to-1 trade for it to break back towards 12775 versus a break up to 130.15. But essentially what I'm saying is that we could see further gains with us breaking out of this triangle. By the looks of it, we need to see this 129.15 taken out, but I do think that'll be a fleeting move, and I do think that soon enough we'll come back onto trend. The picture once more on the daily time frame, with the fact that we have been seeing such sweeping moves and the fact that we've now started to break below key support levels, I do think that we're likely to falter in this resistance area and start to sell off, even if it is just a continuation of these wild swings. Maybe we're going to come back into these sort of 125.50 kind of area. So yes, we're gaining ground at the moment, but I do think that there are a number of reasons why we could see cable substantially lower this time next week.